Let's do a full example of how to fill in an inventory card using the identified cost method. We're just going to leave out inventory write-downs for now because they are in the next chapter and we don't know what they are. So let's take an example. Let's take Fantastico Furniture, sells home and office furniture. They use the perpetual inventory system, which is the only system that we will cover. It just means they use inventory cards and things are recorded immediately as they happen. And we're going to apply the identified cost method. An inventory count is performed on the last day of each month, so that'll be done to determine whether any inventory gain or loss is made. So what is the identified cost method? It is where each unit of inventory is physically marked, for example with a sticker, so it can be individually identified when a transaction occurs. And what we always want to do when we're doing this is go, well, is it actually right for this type of inventory? So it's best for things that are slower moving and not perishable. So things that probably cost a bit more that we don't sell a lot of, they kind of say, well, they're slower moving. Not perishable, like food, it won't go off. For things that are physically larger, and things that it might be distinct that we can actually physically identify and might be a little bit unique. And I think furniture definitely fits that category. It's all of these things here. So that's a good system for this business. And what we're going to need to do is apply all of these rules. So for all of our rules here, using our identified cost method, and we can see it's actually pretty simple for identified cost. Every time all we do is identify the actual unit for every single transaction, except for if there's a purchase return, the cost will be determined by the supplier. So let's take an example. The following information relates to the Rock and Recliner model of inventory. It sells for $500 plus $50 GST. On the 1st of March, inventory on hand was 4 units with a cost price of $200. We're going to put yellow labels on that. And 2 with a cost of $250, we'll put red on there. So when we do our inventory card, we write the date, we write the word balance, and now remember, don't write this in the in column. These would have already come in last month. It's just an opening balance. So we go straight to the balance column and we do 4 at 200 is 800 and 2 at 250 is 500. Now when you're actually doing these, if you've got highlighters, you can highlight these those respective colors if that helps you. So we can see yellow labels here, red labels here. Next day, the 3rd of March, credit sale to S. Pippin of 2 units. One had a yellow label, the other had a red label, invoice 17. And so this is for a sale of inventory. And the rule simply is use the actual unit that is identified. So in this case, there's our inventory card as it is. We'll do the date, 3rd of March. Under details, remember we don't write the name of the person, S. Pippin. We don't write credit sale, we write the document number. So invoice 17. Now one is yellow, so we do 1 at 200, and one is red. 1 at 250. Now, it doesn't matter, do they have to be in this order? Yes, even though we're not doing FIFO, when they were given to us in this order, they gave us the $200 ones first and the 250s. We've still got to keep them in that order. So they're still the first ones in are on top. We're just saying maybe they're not the first ones out. And so what we do in the balance column here is we maintain that order. So we had 4 at 200, now one's gone, so that's 3 at 200 left. And we had 2 at 250, one's gone, so now we've got 1 at 250 left. On the 5th of March, the owner withdrew a rock and recliner to give as a gift to her mother. The unit had a red label, memo A1. So for drawings, same rule, identify the actual unit. So here's our inventory card, and on the 5th of March, we've got memo A1. One went out and it had a red label, so that must mean if we did have one with a red label the day before and we took it, there's none of those left. So all we've got left are 3 units at $200 with yellow labels. 8th of March, purchase of 7 units on invoice T109 from Turbo Wholesale Furniture Inc. 5 units with a cost price of $220, and we're going to put green labels on those, and 2 units with a cost price of $190 with blue labels. So this doesn't happen often, but sometimes when we buy stuff, it comes in with 2 prices on the one transaction. So here's our inventory card as it is. We'll do the date, 8th of March, invoice T109. And because they gave us these ones first, they said 5 with a cost price of $220 and green labels, we're going to put them on top. And that is important to maintain that order, even though we're not using FIFO. Next one, 2 units with a cost of $190 with blue labels, so they'll come in there. So over here, we'll keep our order. We'll put the 3 at $200 on top, and we'll put the 5 at $220, and then the 2 at $190, like that. 9th of March, Fantastico Furniture discovered that 2 of the units bought from Turbo Wholesale the day before were damaged during delivery. These were returned for a full credit of $440 plus GST. Credit note T23. Now, this is the only one that's an exception with identified cost is for a purchase return. It says the cost is determined by the supplier on the credit note. So here's our inventory card from the day before. So we're sending 2 back. So it's going to go in the out column. So first of all, we want the date, and we'll put the document number, which is credit note T23. Which 2? Well, the question, they just look for little things to try and trick you, because otherwise it's a pretty simple topic. So, what can they do? Well, it says there were 2 units returned, and the total was 440 plus GST. Now, the only way the maths of that add up is if those 2 units were $220 each. So the 2 that went out must have been 2 of the green ones, because that's the only way we can get 440. So if the day before we had 5 of the greens, 2 went out, we still got the 3 yellow ones, nothing happened there. But the 5 green ones, 2 were sent back, so now we're left with 3. And we still got the 2 at 190 with blue labels there. 12th of March, cash sale of 4 rocking recliners, 3 with green labels, the other had a blue label, receipt 48. And with sales, we just identify the actual units. So put the date in, receipt 48. We're saying 3 went out with green, 1 went out with blue. So 3 greens at 220. 1 blue at 190, so we've still got the 3 yellow ones, nothing happened. The 3 green ones are now gone, so they won't appear. We had 2 blue ones the day before, 1 blue one went, so now we're left with 1 blue one at 190, like so. 16th of March, Fantastico Furniture donated a rock and recliner with a blue label to a local law firm to use in their client waiting room in return for a sign promoting the business and its products, memo A2. So this is what we call using inventory for advertising. And with identified cost, we just find the sticker or the label. So in this case, it's a blue label. There's our inventory card. So we've got 3 left with yellow stickers at 200, 1 with a blue sticker at 190. We're getting rid of the blue one. So we'll do the 16th of March, memo A2. 1 goes out at 190 with a blue label, and that must mean that's gone, but we've still got the 3 with yellow stickers here. 18th of March, purchase of 5 rock and recliners from Turbo Wholesale Inc. for a total of $10.50 plus 105 GST. Pink labels were placed on these units. EFT receipt 67. So sometimes when we receive a receipt, we think that's just us making a sale. But remember, with a receipt, there's also a customer gets the receipt as well, and in this case that's us. So we've actually paid by electronic funds transfer here, so that is us buying inventory. So that's going to be an in column 1, not an out column. So we'll put the date, 18th of March. Again, all we do in this details column is just write the document number, EFT receipt 67. What the problem here is they haven't given us a dollar amount per unit. So what we've got to do is just a little bit of math. So it's 1,050 total. Remember, we never put GST in the inventory card. So 1,050, we've got 5 units, so 1,050 divided by 5 is 210. So it's 5 units at 210, and if we do the maths on that, it says 1,050, that should match with up here, and it does, so we're all good. So now we've got 3 at 200 and 5 at 210. 22nd of March, sale on account made to D. Rodman for $1,650 inclusive of GST. 2 of the units had yellow label. I don't know how many units that's for. So that's a little bit of a trick there. It's a sale of inventory. I've got to identify the actual units, but I don't know how many. I know at least 2 were there because 2 had yellow labels, but does that mean more? Well, what it comes down to is we'll start with the easy bit, put the date in and the document number. How many units did we sell? Well, what we need to do is, you can't tell from looking at this. You're not going to get it there. However, at the start of the question, it said each of these chairs sells for $500 each. So if we take the GST out of 1,650, we will get 1,500. Now if we sell each chair for 500 and the total is 1,500, that means we sold 3 chairs. So 2 of those chairs had yellow labels. Well, what was the other one? Well, if we look at our inventory card, we've only got yellow and pink left. So I guess we're going to say 2 of these had yellow labels, and the other one therefore must have had a pink label. So what are we left with? Well, we had 3 at 200 the day before. Now 2 of those are gone, so we've got 1 left. We had 5 at 210. And 1 of those is gone, so we've got 4 of those left. 24th of March, D. Rodman, who was the customer from the day before, changed their mind and returned 1 of the units with a yellow label purchased on invoice 21. And they got a full credit off their account for $500 plus GST, credit note number 3. And with the sales return again, we just identify the actual unit, so it's 1 with the yellow label. We've got this number here, 500 plus GST. Well, that's actually irrelevant to this. That's just there to confuse us. We don't need that because an inventory card only ever has the cost price. It never has the sale price. So, in this case, 24th of March, credit note 3. Now, is a sales return an in or an out? Well, the customer is bringing inventory back to us, so it's literally coming back in the door. So that's going to be an in. And the one they brought back in, if you just look at the day before, it says this D. Rodman bought 2 at 200 and 1 at 210. The one they're bringing back is one of these ones with yellow labels. So that's the one coming back in. Now, we had one left after this transaction the day before. One came back, so now we've got 2. And we've still got 4 here with pink labels at 210. Then at the end of the month, an inventory count was conducted, memo A3, and it showed that 7 units of the Rock and Recliner were in stock. 3 units had yellow labels, 4 with pink. So we've either got an inventory gain or an inventory loss. Now it really doesn't matter with identified cost because either way, the rule is going to be the same. We identify the actual unit in either case. Here's our inventory card. So what we do is we go to the balance column here, and it says the most recent balance that I have is 2 at 200 and 4 at 210. I should have 6 in stock. But here I've counted 7, so I've got an inventory gain. So that's going to be this one here. So we do the date, 31st of March, we write memo A3. Which one came in? Well, it says here when I counted 7, there were 3 with yellow and 4 with pink labels. Well, I should only have 2 with yellow and 4 with pink. So I haven't gained a pink one, I've gained a yellow one. So the one that came in, we're going to value at $200. And that must mean now if I had 2 at 200, well, I've got one more, that's 3 at 200. And then the 4 at 210 stays the same for a total there. And there is our full inventory card with every single transaction that we could possibly get at this point. Just in the next chapter, we will need to add in inventory write-downs. But until then, that's everything that we could possibly get.